He pensado en ti desde aquel día que nos dejamos de ver.
Baby, regresa que te necesito. Tanta distancia me está haciendo daño. Baby, regresa que te necesito.
Si en algo te falló el perdón, me castigo en el lamento. Yo sé que fue duro y no me quieres cerca por el momento. Me duele tu decisión, pero no aguanto el sufrimiento. Yo también lo siento, como un artista sin evento, como disco sin personas, como familia sin sustento. Sé que fue real, lo que viste no fue un invento. Y me siento a darle mente, llorando en mi apocentro. Baby, lo siento, de que te amo no te miento.
Baby, regresa que te necesito. Tanta distancia me está haciendo daño. Baby, regresa que te necesito. Baby, regresa que te necesito. Tanta distancia me está haciendo daño. Baby, regresa que te necesito. Vivo atormentado sin tu presencia. En mi cama dejaste tu esencia. Dime qué hago yo sin tu querer. Por favor, vuelve ya a ser mi mujer. No me coges el celular ni una llamada. Dime dónde estás, no me has dicho nada. Te vas a arrepentir de tu decisión. Yo soy el dueño de tu corazón.
Baby, regresa, ven, que no aguanto la agonía de saber que te perdí. Y todo por culpa mía, te engañé, te fallé. Y ahora es que vengo a saber que te amo como un loco ahora que no me quieres ver. No te imaginas la tristeza al acostarme yo en mi cama. Saber que no volverás, tengo que abrazar mi almohada y que me amabas. Eso nunca lo dudaba, pero como tonto al fin a eso mente no le daba. A eso mente no le daba. Cuando en la cama te encontraba. No, 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 no. Wow, 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 wow. ¿Qué será, qué será? ¿Qué será de mí sin ti? ¿Qué será de mí, mami? Wow, 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 wow.
Baby, regresa que te necesito. Tanta distancia me está haciendo daño. Baby, regresa que te necesito. Baby, regresa que te necesito. Tanta distancia me está haciendo daño. Baby, regresa que te necesito.
Haciendo música a otro nivel. Tachoco.
And C Melody, yo, C Tunes Music, a fuego ENC, M mayúscula, que es lo que, Cali D, yo, en el beat.
DJ Tavera.
Hi and good morning, friends. Welcome. United Traders Day Trading TV at Friday, the last trading day of this week, Friday the 14th of June. Yeah, this morning we will have a very special session, so something's wrong. I can hear myself on the stream. That's not very nice. So, yeah, a very special session. The beauty of small numbers. So we want to go, or we want to have some little number games to show you, to show me, to show us what small numbers in terms of small risk can do for us. Yeah, so no trading today, I think. I'm not sure how long it will take. It depends a little on you, if there are a lot of questions or not. But yeah, let's start with it. Let's go into that. So. There's something else I'm not very happy about this morning. I'm not sure if we will not face somehow some technical issues in the middle of all this. Yeah, the people watching me for a longer time already know that sometimes my provider is setting up a bandwidth limiter. So, and if this is going to take place during this show, and there's some chance that it will happen exactly in the middle of the show because of the numbers of gigabytes I have consumed already, then yeah, unfortunately the show will go down. I have to call them up. I have to tell them to remove this limiter. Yeah, I'm paying for an unlimited bandwidth, and for some reasons they have a software issue. Every month when the new payment period is starting, they have removed this off-limit configuration of my internet account, and yeah, I'm running into the limit very fast because this transmission of TV stream, video and data stream is consuming a lot of gigabytes. So what the people usually have for a month, I'm eating up in 1 or 2 days. So to give you an idea, when I'm having a show every morning and sometimes a New York show for a month, that is roughly about 800 gigabytes. So it's already something. Yeah, okay, but let's see. In case this will happen during the show, please stay tuned. Usually I'm able to fix it in 5 to 10 minutes, but let's see. Hopefully we will not face these issues this morning. Yeah, I'm not exactly sure how to start best with this. The idea why we have brought this up was, yeah, we are trading, and my way of trading is a very defensive one, and usually I'm stating it's not our job, or the name of the game is not to make money. The name of the game is not to lose money, and therefore we need a very proper risk or money management installed. With this way of trading basically one pair, risk and money management is almost the same. The money management, let me try to define it for you. The money management basically determines the position size that you have in a single pair, and how many percent of an account you are investing in a single pair, how many percent of your overall trading equity you are putting on risk with one single asset or a special financial instrument. So the risk management is a little wider. So in terms of risk management, we have to say, okay, we want to spread our risk over different asset classes, maybe some futures, some currencies, some equities, some gold, some other commodities, some grain, some pork bellies or whatever. So, and risk, to reduce risk in this meaning, means you should split your money over different asset classes. Maybe you want to pay to buy a painting from Mr. Rembrandt or Picasso or someone. So this way you're decreasing your risk. Means that if something is going wrong in one of your different asset classes, it will not affect your whole account because you have 10 different asset classes you have invested your money in. But we are day traders here, and at least me, I'm trading 99% only one pair. So for me, risk management is nearly the same like money management, and that is how to have the position size right according to the risks in the market, according to the account size, according to the volatility. So risk and money management in this very special case is almost the same. Yeah, and we try to keep our risk small. So what I'm usually doing here is playing with relatively small numbers. And you know, I was doing an experiment with new traders in Bangladesh last year. Finally, I have given up on that because it went not very well. People there are relatively new to the forex market, so in the very beginning, I think everyone was the same with me, is somehow in some casino mode, some gambling mode. You want to make 100% every second day or every second week, if you are very patient. So everything I'm trying to explain to you and teaching to you was not worth anything for them, because growing your account with 0.something% a day, it will take time to make the first million, and most of these people want to have the first million tomorrow. Yeah, the same like I was starting with my trading. I wanted to be rich. Yeah, at least at the end of the year. So yeah, but the small numbers, there's something in it, and therefore I want to play around with some numbers during this session. Thanks Michael for the hint. I will reduce the sound. Good morning Ray. Good morning Michael, by the way. Yeah, I hope it's better now, and I'm also seeing that my microphone is not working very well, so maybe this combination should work out. If not, please let me know. Yeah, and of course you are very welcome to ask questions during this session, because it does not make sense if you're not able to follow. But from Michael especially, I know he is very used to these numbers. He was able to calculate something with a compounding effect a few shows back, so he is well trained on that, I think. Yeah, where to start? From chat sessions I was having during the past few days. One of the problems people have with trading is that when the numbers are growing, for example, you have been trading on a demo account and you are going to a real money account then, or you have been trading a small real money account and you are sizing it up. And usually we tend to start up our trading with $300, $500 or something like that to train us. And after we have been successful for a while on this account sizes, we think, okay, now we are ready to do it with real money. So with reasonable amounts of real money, so that you can make your living or some luxury life out of that. So we are not going from 500 to, let's say, 2,000. No, we tend to go from 500 to 10,000, or maybe some of us to 20,000. So the numbers are changing very strong. And yeah, if you're down 1.5% on an 1K account, that is $15. If you have it on a 10K account, it's $150, and if you have it on a 20K account, it's $300. This $15 on the small account, it does not affect us in any way. It's small money. Okay, it depends on in which region of the world you are living in, but usually we tend to see it as a relatively small money, something you may be able to buy a lunch or a dinner from, or maybe an ice cone or a beer or something like that. But losing $150 or $300, that is already something. Maybe it's a third of the rent for your flat that you have to pay every month. So we tend to get much more nervous, much more affected, much more stressed by losing $300 than it was with $15. So yeah, and that, once again, trading small has a lot of advantages for us. Because the fear level, the panic level is much smaller, and okay, then, but on the other hand, we are thinking doing only 0.something% a day. Phew, how can it help me? Yeah, and that is something I want to go into. So I want to bring up an Excel sheet. So I want to have this screen going away. Yeah, thank you, computer. And here, so I have to size it up a little so that you can see it hopefully in a perfect way. So we are relying on some written text and numbers this morning. So if you have the option, please choose the best video quality you may have. If you don't know how to do it, it's quite easy. At the right bottom line of the TV screen you're receiving, there is a word usually called medium beside the Facebook share and the Twitter share, and you can change from medium to high or high definition HD quality. So that should improve the quality of text, the quality of screen, so that you are able to see the numbers as well. Yeah, I want to create a little Excel sheet with you. Let's go with how to do it best. We want to play around with equity and with equity. Computer, hello. And of course we have some starting equity. So something I want to ask you, is it possible for you to read what I'm writing here, or is it too small? Start equity, please let me know. Can you read that or not? If not, I can try to size up a little. Hopefully it is possible for you to see it. Yeah, if not, let me know. Without being able to read what I'm writing here, it does not make too much sense. Okay, we have a starting equity, and we want to play around with our trading results. So we need to have some kind of estimation about our profit per day. If we are talking about a profit per day, to give you an idea what we are doing on our real money account, this 1K account, we have roughly made 0.3% a day, and we are up roughly 9% still. Was not able to go through the 10%. So if we are talking about a profit per day and we want to have a projection for the year, so let's say we are going to define the number of trading days we are talking of. We have to define the number of months we are talking of, and maybe we are going a little longer for several years then. So we want to see the profit, so let that bring up, and we want to see the profit added to our starting capital. We are once again talking about the equity, but this time at the end of our period that we are watching for. So let's make it look a little more nice. Let's set up some. Yeah, by the way, if you're interested in, of course you will get this sheet if you like to finally. So let's play around with it. Let's say we are going, just to have a number in, we are starting with 10k, 10,000. So needs to be some formatting, and there needs to be some formatting for this and this as well, because these are a currency. So it's not euros, it's regardless what we are talking about, if euros or not, and we do not need to have some decimal points. So it's $10,000. So let's take what we have on the real money account that we are trading on. The trading days per month, I usually tend to take something around 15 or 16. Let's take 16. So we are not trading every day, we are trading 12 months, we are trading 1 year for this moment. So how to calculate the profit? I was thinking to prepare something for you, or to do it live here. I want to do it live because for some people it seems to be a real mystic task to calculate such numbers, but it's relatively easy. So I want to do it together with you here from scratch, that you can see there is no magic behind. So if you want to have your profit, and for Michael and all the others, we are not considering the compounding effect here. We are doing a linear way of calculation first. We are going into this compounding effect a little later, so do not wonder. So of course, if we want to know our profit, we have to take the starting equity, we have to multiply it by the profit per day, we have to multiply it with the numbers of days we are trading, we have to multiply it with the numbers of months we are trading, and we have to multiply it, oops, why I'm not allowed to take this, so I do it manually, the number of years we are talking about. So what's going wrong here? Sorry, it's not G4, it's G6. Oops. Hello? Oh, okay, sorry. It's a German Excel. So I was using the wrong sign for the decimal point. So if we are having these numbers and we are trading roughly for a year, and I have chosen 16 days per month. Usually if you're employed by someone, we are talking about 200 working days, 200 to 220 working days. So it depends on you what you want to take. You have, from the year of 365 days, you have to subtract the weekends, you have to subtract the holidays, you have to subtract some amount of days that you may have some illness or something. So roughly 200 to 220 days. So but you can change that yourself. So to have the end equity, it is quite easy. We have to take the profit and we have to add it to the starting equity. So at the end of the year we will have 15,700 something dollars. That's not too bad, I would say. It's round about, yeah, it's 57%. So now let's have a look if we are going in having some more years. So let's bring that up again and let's talk about how is it looking after 2 years, after 3 years, 4 years, 5 years. So you see the numbers, we are growing, but we are growing in a very linear way. So at the end, you can see it, after 5 years we have almost quadrupled our results. So even with doing a relatively small numbers, the gain, the profit in itself. Oh, we should add something. Let me put it in here. We should have the profit in percent. So how to calculate the profit in percent? So it's not blue, so let's have it blue as well. Oh, we should have it green. Because it's a positive, it's a profit. Yeah, let's have it in a slight green. Yeah. How to calculate the profit? It's just that you have to take the profit divided by what you have started with. So, and then we have to give this cells format, because we are talking about percentage, and yeah, we do not need to have decimal places. So that's it, and we can just duplicate this calculation to the other lines with expanding it with the mouse, but it's not an introduction into Excel here. So what we can see after 5 years, wow, 288%. That's really cool. Do you know of any investment out there going into an investment fund, investing into a hedge fund, investing into anything that you know that you are doing roughly 300% in 5 years? I do not know. And we have based it on a relatively small number here with this 0.3%. Hey, good morning, bonjour. Cool. Yeah, so what you can see here, it is, yeah, for me it's already unbelievable, but something that you can also see. You're going in with 10,000, and you know we are retail traders. Not many of us are having an account with 10,000. Most of us are going with 1,000, 3,000, 5,000. But after 5 years of really cool work, you are close to 40,000, not to a million, 40,000. But okay, there's a good news for you. There's a really good news for you. That was the linear way of calculation. That means you are doing 0.3% every day based on the starting equity. So 0.3% of 10,000. Let's to have a number. How to get the number? It's easy. Let's multiply the 10,000 by 0.3%. So we are making $30 every day. After 1 day, we have in here $10,030. After 2 days, we have in there $10,060. But we are taking the 3% always from the starting, not from the growing number. So that is the linear way of calculation. But what we really do, or what we should do, what I strongly recommend to do, is that we should use the compounding effect. That means we are taking, at the second day, we are taking the 0.3% from the $10,030. On the second day, we are taking the 0.3% from the $10,060, and so on. So, and there's something I have prepared for you, because the next Excel sheet is a little more complex, but so far. Hey, good morning, Rashid. Cool that you are in here. So far, can you follow what I'm doing here and how this is calculated? And if not, please let me know, but because the next sheet with the compounding effect is a little more complex. The calculations in itself are still very simple, and you have seen how easy it is to calculate your profit at the end of the day. You only have to multiply all these numbers with each other, so finally you get your profits. Oh, something you cannot see. Sorry for that. You're not able to see the formula. So here, I'm talking about this. I was putting that in, and it's only a multiplication of all the numbers: the starting equity, the profit per day, how many trading days you want to have per month, how many months you want to trade, and how many years you want to consider in your calculation. So this finally delivers this number here. Okay. Yeah, for all the guys that are familiar with that, it will not be very demanding for you today, because yeah, it's a relatively simple math. But many people, I do not know how it was in your school time, there have been two parties of pupils, students. One, they have been relatively open-minded, and they have to going into the mathematics lessons, and yeah, they have been just following. And then there have been this other group of people saying, maybe they have known it already from their parents, oh, mathematics, it's so complicated, so I will never get through this number. So they have closed or shut down their main computer, their brain, before every lesson, because they knew beforehand they will never make it. So, but in fact, it's really easy. So let's try it. Maybe I can help you to close some gap from school time. Okay, so there is something else. Let me adjust the screen. Oh, yeah. Yeah, we can yeah. So let me explain this sheet for you. This sheet here, this one. It's once again going with the starting equity. So we have chosen in the other example 10,000. So let me have 10,000 for you. Then we want to have the earnings per day, and if I remember right, it would have been 0.3%. Then let's have the number of trading days per month. It have been 16. And let's forget about this. We do not want to withdraw anything every month, so we just take the numbers. The results are presented here. The equity at the end of year one, then year 2, 3, 4, 5. We once again have 5 years, and having the same numbers, and this is per default calculated for a year, so we do not have to put in the number of months. It is calculated with 12 months for 1 year, so we have already made 77% in the first year. Do you remember? Here you have been 58%, and then the next year 115. So here it's a little bit different. We are making 77% in the first year. At the end of the second year we have already 200 and something. At the end of year 5, it's a number, because it's a percentage. I really hesitating to call this number. It's 1,600%. So do you think what do you think about these numbers? The difference between what we have done before is now we are using the compounded effect. So the second day of our calculation is calculated with having the profits from the first day in it, and the third day is calculated with having the profits from the first 2 days in it. So the 0.3% is taken from a growing number, not from the 10k from the very beginning. So how is this making a difference? I will show you in a diagram here. So hopefully Yeah, I have to size up a little. Wait. Do not get nervous. I will deliver. So, this line here, this more or less red color line, that was our linear approach that we have been having. And this one is using the compounded effect. So what you see here at the end of the 5th year, there's something. Okay, how to update this chart? I'm relatively familiar with Excel, but how to update this chart? I was doing a run yesterday with different numbers with 25k. So I'm chart tools, select data. Please give me a second. Yeah, linear growth. Okay. So, oops. How to update the chart? That are the numbers from yesterday. We do not have 400 or 350k with the compounded effect. We have only in quotes 177. And how is it? Yeah. That's cool. How to update the chart? Please use the current numbers, not my numbers from yesterday. Please give me a second. Sorry for that. Sometimes I'm creating some problems of my own. Select data. Let's the compounded growth. So let's wait. Risk calcs. Yeah. Why is it still not? Hello. Why isn't it possible to update these numbers? Just a second. Yeah, okay, sorry for that. These numbers are taken from the wrong Excel sheet. It's quite easy. Stupid mistake, so let me correct that. I want to take the numbers from here. So yeah, the first line is in, and then I want to have the second, and I want to have the numbers from here. So okay. So linear, then I need to take them. Just a second, we are getting closer to it. Please don't give up on me. Yeah, here we are. Besides the name, the first one is the compounded effect, and the last one is the linear effect. And yeah, you can see strongly that with the linear effect we are below 40,000. With the compounding effect we are close to 180,000, and that is based now on the numbers I was showing you. So Something from Mark. Oh, I'm very sorry for that. So that's a good hint. So we will take out this and let's have a look on the screen what we have seen so far. Okay, sorry for this little confusion with the diagram. So, but finally, I hope you are able to see the numbers quite clear now. So what is ongoing there in the chat? Let me check. Oh, Mark is giving some action link for the economic calendar. Okay. Okay, yeah, thanks for the information, Mark. I will go or check it out myself later, and for all the others you can do it as well. Yeah, you have seen the diagram from the compounding effect, so, and you can see the numbers. So once again, let's play around with these numbers. Let's have a second scenario. Let's put in some more numbers here, and with this Excel you can have different scenarios. So let's do something that may also interesting for you. Let's say we are starting with a 1K account. Let's say we are still doing the same profit per day, and let's say we are still trading 16 days. So of course it's not surprising we are once again doing, after 5 years, 1673%. so it's still an insane number, but it might not look very interesting for us to start up with a 1K account and finally we are coming out with something below 20. So it's still not a million. Yeah, and that is something. The idea for the session was to show you what small numbers can do for you, but also what they cannot do for you. So it may kill some illusions, some dreams, some hopes you may have. With some proper risk management, with reasonable numbers in your trading, and that means that you are not doubling your account every 2 months, it will take some time, and it is a very good idea for you to have that in mind, because it will reduce the pressure you put on your shoulders. You cannot have your first million starting with a 1K account after 5 years. It's not possible. It's not possible. So yeah, so something. It's becoming a little more complex once again, but want to ask you. So far, it is clear the difference between the calculation of this is that it is a formula using an exponential function. It's an exponential growth of capital if you use the compounding effect. It's a compound of interest rates. If you want to have a look somewhere into Wikipedia or something, look for the compounding effect and you will get the formula. It's not that simple anymore as before, so let me yeah, the next step I want to go with you is I want to give you an idea, if you want to make your living out of your trading, what might be a reasonable account size for you. So therefore I want to expand the cheat once again. Let me prepare that and I will explain you. And unfortunately I know the quality of writing may be decreasing because I have to take a larger view, but I'm checking it on the medium quality. It should be readable, hopefully. So let me zoom in as exact as possible so that we are not losing any pixels wasted somewhere. So what we have here, this additional table, that is the split up of the very first year per month. So you can see how you will get to this result of $1,777 at the end of the year, and you can see how this equity is growing from 1,000, the starting equity, to 1,049, 100, 1,150, and so on, till you finally reach the 1,077. So, and you also see that based on the compounding effect, the profit is not the same anymore. It is growing. So it is growing relatively fast. So that is what you can see. And now we have some more options. We are playing with this. Let's go to the first scenario. We are playing with the $10,000 starting capital. So, and now you can define how many percent of your profit. The profit is what you make in the first month. For example, $490. How many percent do you want to take off? Let's say, okay, you want to take off 100%. I guess you have an idea what will happen here. If you take 100% of your profits out, okay, there's a small mistake, small failure in my formula, but okay, the account will not grow. The account will not grow. I have forgotten to take off this from the very first number, so that means in the first month you are not taking off the profits, but from this then on you're taking off the profits all the time. Here it's the withdrawal here in this line. We are taking off 100% of profits, so the account finally is not growing. Okay, so maybe you are thinking not to take off everything, but maybe you are taking off 50% of your profits. So the account is growing, and after a year you're 37% in profit, so it's not bad. And you can see you can make roughly $500 out of this account every month if you have this growth rate. And now there is something else in this table I want to show you. The last line. Of course there will be times when you have a drawdown. And yeah, let's assume you have trained very well, everything is going well, and there is something like the overconfidence. We know this effect very well, and in the fourth month we are losing 15%. Hopefully you're still able to read the numbers. We are losing 15% of our capital. So you can see the 15% relates to 1,600. So this month you will not have an income because you have had the loss. So your withdrawal is nothing, and you see you're going back, you're going below your starting equity, and finally, if you have then once again 0.3% per day, you will come up in the finally with 13% at the end of year. That's still something. But let's say you're having another losing month, and or you have a break-even month. To represent a break-even month, I have to fill in a loss of something very small, and you see your earnings, what you can take out, are changing. So with this approach now you can have, it's one losing month with 15% and more or less a break-even month, and yeah, if you have another break-even month, your 2,400 earnings per year are going down to 2,100. Once again, let's start without having any trading problems, and we are trading like robots without having any losses. So now we have $300 and $3,380 to our disposal at the end of the first year. This is the end of the first year here, this line. So you see how these numbers are changing, and you see if you want to make your living out of it, and 0.3 is already something. And it's not easy to achieve. You know, we have to fight hard on our account, and you know the impact of big numbers. Having a $10,000 account is different from trading a $1,000 account in terms of your mindset. Okay, Mark and Michael are discussing about the calendar, so sorry, I had to read it. So it's not related to the topic. So I want to ask the other guys, do you want me to put some special numbers in to see what may work out for you? Or are there any questions at all? So I'm not sure if you're still there and if it is somehow interesting for you. We are trying to find out how much money do you need in your account if you are doing 0.3% in profit per day, which relates to roughly 40% a year. And to put it in relation or into a context, there are a lot of hedge funds out there, there are a lot of investment funds out there. There are only a handful worldwide having something close to 40% a year. So this number you have to deliver is already outstanding, this 0.3% per day. So I would say you cannot make your living, and I guess you will need some more than $500 per month to make your living, to pay your bills, to pay your flat, to buy some food, to pay the insurance for your car or whatever. So even with 10,000 it will not work out. So let's set up another scenario here. Let's go, or let's start with 25,000. Let's fill in the same profit. Let's trade more or less full time the full year, and let's take out once again 50% of your earnings. So not surprising, here in the results we are still making 37%, because the percentage and the number of trading days are still the same. So that is what we have at the end of the year. So now we have some continuous profits from starting from $1,200 to $1,600 at the end of the year. So that may work out already for you. But then if you put in a losing month, 10%, another losing month going down 10% again, so, and then maybe more or less a break-even month. Oops, sorry. German Excel, so I need not to use the point but the comma for the colon for decimal point. So you see, then you have roughly your withdrawals per year are going down to 5,300 then, and we have been without having any losses. Let's create this scenario once again, so let's clean it up. Let's kill our losses. You have had 8,000. And you also can see if you have after 5 years, let's pay attention to the result after 5 years of not having a losing month, and think about how reliable or how probable that might be. Now you have round about 110,000, but having at the very beginning some month with losses because you're not that stable in your trading. Oops. You see, you have lost roughly 20k after 5 years. So that is also something that is very important to know. The more reliable you are trading from the very beginning, the bigger the numbers are getting that you are able to earn in the long run. So the compounding effect is working for you every day. So it is much better to have a day with, or a result with, only 0.1% per day in average, but then not having a losing month, then having a really strong number here for the returns per day, but you are facing some problems because you cannot achieve it. You are pressing for these numbers, you're trying to force something, so you are having some bad experiences with that, and you are creating some losses. It will eat up your performance finally. So the beauty of the small numbers is, and let's do something, another scenario. Let's set up something. You're starting with 25, or let's say 10k again. You are staying with this 0.3%. You are going for 16 trading days a month. You are not withdrawing anything. So now we want to know the result after, let's say, 10 years or 8 years. How to do that best, because I do not have a parameter called years. So let's see, just a second. Okay, it's not calculated here, it's calculated somewhere down. Yeah, the easiest way to do is let's scale up the trading days per month. So if you want to know the numbers after 10 years, let's take 32 trading days per month. I know the month does not have 32 trading days, but doubling the numbers of trading days will double the number of the time you are doing the calculation on. So what we are looking at is what you have after 10 years, and this number is really impressive then. So go with the small numbers. So this is not 5 years anymore, that is 10 years now. That is after 5 years, 6 years, 7 years, 7 years 6, 7, 8, 9, 10. I need to learn how to count correctly. And let's reduce our earnings per day. Let's go to 0.25. I'm looking what we need to get close to the million. I know we can calculate that, but I have not set it up, and it's not that easy as before. So 0.27, 0.26. Yeah, that's very close. So after 10 years, roughly, you will have your million, starting with a 10k account, making roughly 0.26% per day, and not taking out anything, not having a single losing month. So you will have your first million after 10 years. So I do not know about your age. I'm 47. So in 10 years I'm let me do the calculation. 47 plus 10, it's 57. So the usual retirement age here in Germany for if you are employed is 65 at the moment. Depends on the branch you are in, maybe 63. Maybe till then we are up to 67, because the retirement age is going up every now and then a little. So having your million in 10 years is still cool. And yeah, basically that's what I wanted to show you, how this relatively small numbers, and that is you're pushing for. If you're coming up at the end of the month with 3 or 5%, so what you are coming up at the end of the month, let's do it. Let's say we have 16 trading days, 16 multiplied by 0.26. You're coming up with roughly 4% at the end of the month. Most of us are not considering that as a really good result. It's already outstanding. Of course, on the forums, on Forex Factory, on all the other news places and in the social media we have talking about trading, the people state, I'm up 50% this month. Yeah, cool, but they are down 100% next month. So they have to start from scratch. I think you can confirm that based on your own experience. So this playing with relatively small numbers and having a really strict risk management, having a predefined maximum drawdown per day, of course a reasonable one. If you have a predefined maximum drawdown per day of 50%, it will not help you. But having something reasonable, 3%, 5%, but please do not go beyond 5%. This number should reflect your results that you have had during the last 3 or 6 months. So I'm willing to put 1 week's work at risk. So that is the 5% I have on this 1K account. On my big account I have only 3%. That is what I can make in a week. Maybe it takes 2 weeks to make this 3 or 5% back, but okay, that's still reasonable. So do not choose something that you cannot make back in 1 or 2 weeks work. Yeah, that's it for now. Yeah, I have to apologize for this little mistakes in my formula and the problem with the diagram, but yeah, let's let's go back to a more reasonable scenario. Well, let's set up another one. Let's start once again with a 25k. Let's say you are doing your 0.25. Let's say we have 16 trading days. So, and here, of course, we have to switch this scenario on. So you have $200,000 after 5 years. You have 700. You have made 700%. That is a really cool number. You based on the compounding effect, you are close to 100% after the second day. After the second year. After the second day. Sorry. Yeah. Yeah, that is something that could be possible if you're very disciplined. That is something we really can go for, or try to go for. We should not overstretch our luck and our skills. Usually we are not able to do that. So yeah, if you want to make your living out of it, let's fill in once again that you maybe you want to take out 50%. Then of course in the first year you will have roughly $3,000, not per month, per year, to your disposal. Finally, at the 5th year, it's 13,000 after 5 years of hard work. So if you want to make your living out of that, and oh, sorry, I have not taken out 50. I was taking. So I do not know if you are willing to stay. If you are able to make your living out of $7,000 per year. So ask yourself what to do. Of course, you can increase the starting capital. You can increase, maybe you can work 1 more day. So, and maybe you want to take out 75%, though you are not want your capital growing that strong. Oh, here's still a loss in, sorry. And there's another loss. So here we are. So maybe these numbers are looking more 20k per year pre-tax. I do not know how you manage tax, but 20k per year is roughly 1.6k per month pre-tax. So do not know about the tax on capital gains, on interest from capital. Here in Germany, I have to pay 25% on that. So yeah, one fourth is going to the government, to the financial minister. Yeah, okay. No tax for you. Yeah, I know, Mark. I know it's a nice location you're in. Yeah, that's it, at least for now. If you're interested to have this Excel sheet, please let me know. Send me an email or something so that I can send it to you. Those that I have your email address. It's a very simple Excel sheet. You can play around with it, and of course there are not only you can simulate what you may have in the first few years. I have it set up for 5 years. I will go and try to correct the little mistake that is still in there. And of course there's something very, very strong. There's not only a withdrawal that you can have, you can add some funds. Maybe, you know, even if starting, let's go with the 10,000 again. So if you're going with the 10,000 and you know there will be, after 6 months of work, your grandma is investing another 5k, you can do it. And oh, it's the wrong number, it's 16. So let's have a look at what you have after 5 years, how this 5k are playing out if you add another 5k after 6 months or so. So 120 you have at the moment. If you fill in another 5k at the very beginning of your 5-year trading period, you come up with 166. So that is a compounding effect. The capital is growing very, very strong, and yeah, that is really cool, I would say. So if you're young, if you're in the 30s, I'm already at this end of the 40s, so but it's still enough time to make your millions, and I'm sure I will make. And my goal is, if you're interested in, let's do it together. I think I can deliver you some good, yeah, let's say coaching. I know we tend to go away from our rules, to leave the way to freedom. We try to test something out, and usually it will not work out that well as when we would have sticked to the basic rules. FTI is saying it all the time, stick to the basic rules. Of course we are improving, of course we are having more experience, we are having more screen time, so we are able to detect some more detailed on the chart. We are spotting some more correlations. We are more safe in our actions, in our decision making. We believe in our skills, so things are improving, but we have to stick to the rules. We cannot go with a different method every second month or every 3 months. We will not make anything. But sticking to something that is make you 10 pips a day, and think about 10 pips a day, it will make you rich. Hey, Ray, if you make, let me see what Ray is asking. If I make 0.45% on a 1k account per day, then I only make, when not increasing the size of Scout. Yeah, bye, bonjour. Yeah, that is right. Sorry. Yes, Ray, if you trade the same size, your returns will stay the same, theoretically. Also, with a large account, you can add far more aggressive to the same size scout. Maybe. Yeah, the compounding effect. Yeah, thank you, Ray. This hint is... I have forgotten to mention something that is really important. To have this compounding effect working for you in your trading. Of course, let's say you're trading a Microlot Scout on a 1K account and your account is growing. Let's say you have earned already 10%. So your Microlot account should grow. Your Microlot Scout should grow also by 10%. I do that in my trading. I scale up the scout size or the next levels I'm sending in according to my account size. Without doing that, you will not have the compounding effect. Regardless if you have 1K or 100K in the account, if you're playing the same sizes for the same time per day, you will have the same absolute earnings. So means if you're making 0.45%, which is $4.50 on a 1K account, if you do the same on a 100K account, it is still $4.50, and that is not how to use the compounding effect. So you have to grow your position sizes as well, and I strongly recommend not to change your way of trading. You should send in the same levels all the time, because you have to get used to, and over time you get used to it. So you know when there's a certain move on the screen, a certain amount of pips going against you, you know what to do. You know that you have to send in level 3 or 4 or whatever, and you should not change it. But what the level 2 or 3 is representing should grow. That means also your scout should grow with the growing account. Depending on the broker, you cannot do it continuously. So if you're going with Oander, I know some of you are going with Oander, it's quite easy. So you can go below the Microlot. So having earned the first 10% to the account, you can go with 1.1 Microlot. If you are going with an MT4 broker not offering that, then the next step can be the 2 Microlots, and therefore you need to grow your account already somehow significantly. So it is, yeah, I know, Ray, you're right. It's not that easy to scale smoothly your position size. So you have some major steps. So you have some kind of wave. Let's say you're growing your account, but you're staying with your Microlot because you cannot have 1.1 Microlot. You only can have 1 Microlot or 2. So you have to trade a little below the compounding number or below the exact number relating to your current size, and then you're stepping up to 2 Microlots, and maybe then you're a little more aggressive than in the beginning. But the larger the account is, and that is something else, the better you can manage your risk. With a 100K account, for example, I do not recommend to go to 100K, and maybe you're not able to go there with your starting equity. But having a 100K account, what is the Microlot for me now on the 1K account, could be the mini lot then. So then you for example, you can scale easily, or do it with a 10K account. So the Microlot I'm having on the 1K is a mini lot on the 10K account, and then you can scale every 10% you have made on the account, sizing up your scout from 1 mini lot to 1.1 mini lot, 1.2, and then it will grow. And that is that is important to do. But thanks. I was completely forgetting about that, how to implement that in your trading. And the way is you have to size up your positions. And I strongly recommend to do it that way. Don't change that the idea that you have to go for more pips now or something, because that may work out for a few weeks, maybe a few months, but then you have to change your way of trading, and that's not what you should do. You should trade the same way all the time, because you need to get used to, you need to develop your belief in your skills. So the only way to do it is to size up your position sizes. And therefore, for me it's relatively easy. I'm using hotkeys for sending in the troops, so the levels I have defined are defined here on my keyboard, and so I can factor in the growing account size, and the position size is managed accordingly. So there's nothing I have to do. I still can send in my level 1 and it will have the appropriate size, or my level 5. So okay. Okay, thanks Michael, have a nice day. Yeah, a nice weekend as well. It's Friday, so yeah. Something else, Ray, maybe something I've forgotten to talk about or to give you the information. Sorry for that. So basically I'm through with that. Something that I strongly recommend is to have your calculations your own. We are all dreaming of trading full time and making our living from trading, but that is, we have to be aware of the numbers, and we have to be aware of what it requires. So let's say let's play with Ray's configuration. He is trading in 1K account, he is having 0.45%, and let's say he is trading really every day possible. So, and he is okay, here we are. Is it really true? Yeah, why not? So Ray is... What's going wrong here? Oh, sorry. There's still some additional funding in. So here we are. So Ray, with this approach you are making roughly 150% per year. Wow. So that is... Yeah, I think you're able to make it on this account, but I do not want to be demotivating or discouraging you. But having 150% per year, you will have this year's. There will be this gains per year for sure, because sometimes we are very lucky with our trading, and things are running very well, but it's not a good idea to rely on that. So go with what the market is delivering you, but do not press for it. So if you have only 0.1 and you're running out of trading time, or you feel the mind that is getting weaker, close out. So nothing to force for. But okay. Yeah, Ray's asking, for example, if you're increasing your account size by 10%, then increase your scout by 10% as well. Yeah, that is the way I do it. So for me, I do not want to change my way of thinking. I do not want to change the way of managing my risk. So I'm thinking in levels. And a level is representing a certain troop size. And so maybe in the beginning my level 1 which is a scout, is 1 microlot, but maybe with increasing account size it will be 2 microlots and then 3 microlots. So I'm still, because I'm used to the levels, I'm not used to the numbers that are represented by it, and I try to have this abstract way of thinking about the numbers. It makes it easier for me to trade 1k account or to trade a 10k or 100k account. The levels are still the same, so I do not have to think in terms of detailed troop sizes. I try to train me on levels. So maybe now the level 1 is 1 mini lot, and maybe in 3 years the level 1 is 1 standard lot, because I've grown the account that much. Yeah, so my idea is try to adapt your scout size, and therefore I strongly recommend, there are millions of scripts out there in the internet, have some hotkeys for sending in a certain level, because if you have to do the calculations all the time yourself, and the numbers are sometimes a little ugly to the multiplications in your head. So I love to think in terms of levels, like the Fibonacci skewing itself, there are also different levels, and which number is represented by a level is done by a piece of software in the background. And every time I have to size up my scout, I set 1 parameter and all the levels are increased accordingly, or maybe decreased if I have a bad year. Yeah, okay. Thanks, Rashid, for remove the X. Yeah, you're right, but the system is taking the first X in the row, so it was still working. But the problem was that there was some additional funding here in the calculations, so it was not really 800% in the first year. But something I strongly recommend for your trading: do everything based on our everyday experience in non-trading life, and we have some really good feeling for that about risk management. You know, money management is nothing else or not different from that. If we feel that it is, or if we have the gut feeling it is not right somehow, yeah, the risk is too big. The same is true for your performance. For example, if you do the rough calculation with the scenario Ray is trading at the moment, and it's really cool, I'm very happy that you're able to do that. But think about the 150% per year. That is a tough number. So maybe you're taking a little too big risk. So, because that is what we can read out of that. If the number is that good, and you know there is no one else on earth who can do that, of course I appreciate myself to think, okay, I'm somehow very special, so why to care about all the others? But put it into a context. So go with whatever you do as long as it's running, but please be not disappointed if this number is decreasing over the years with the increase in your account, and do not force for it. It is something that is true for now. You're doing extraordinary well, but it might become smaller over the years, and then please do not force for anything. Okay, that's it for now. The beauty of the small numbers. Yeah, please, if there are some more questions or something, please let me know. Yeah, it would have been cool to have a very special Excel sheet for calculating what you need to have in your account and what performance you need to make your living out of it. But maybe it will serve you as well, so you can have this Excel sheet and play around with the numbers. It's quite easy. You cannot ruin this sheet. You just have to fill in some numbers and you will get the results for it. Yeah, that's it for now. We are closing out a little early then. Yeah, if there's nothing from your side, I wish you a pleasant, relaxing weekend. I try to predict that I will have a London session on Monday, but you never know. There are so many ifs and thens at the moment, and the technique is not always working for me here on my side. So yeah, I will have a standard London opening session on Monday with trading. So yeah, let's have a meeting then again. So thanks for joining in. Wish you all the best. Yeah, that's it for now. Bye bye, friends.